Moving on, we have Sanjeev Keskar, who's written in through email. Now, Sanjeev says his society is undergoing redevelopment. He wants to know if any taxes are applicable if he invests the entire amount that he received as rent from the developer to buy carpet area. He also wants to know if there is any tax on the corpus fund that he'll receive from the developer. Now, it's a very interesting transaction. He's taken rent from the developer and he's bought carpet area.
So again, these are very complex arrangements, and there cannot be any straitjacket answer. But let me try to sort of put some principles.
Which is why they're coming to us.
So let me put some principles, because these are really complex, and this kind of arrangements do get challenged, litigated because there's no clarity in the law. So one is that obviously in this case, I'm not sure whether there is a society or they are individual owners or they are tenants, whatever. One has to evaluate that. Then the transaction is between the developer and the society, or developer and individuals, or developer and the owner where these people are tenants. Third aspect is that obviously the compensation is being paid.
Let's answer the question keeping in mind the lowest common denominator. That is, most people live in societies that go into redevelopment. Most people sign. You have to sign individual contracts with the developer concerned. So, keeping all this in mind, if this is the group that he belongs to, then what happens?
Yeah. So, if it is society, at least in my experience, I have seen society which signs the agreement because the society is the owner. So, when originally somebody has constructed and there is a society, the conveyance happens of the whole land in the name of society.
No, but he's bought carpet area. That would be an individual contract, right?
Yeah. So the carpet area is again allocated to the society, and in turn society allocates to the members.
Okay.
Right. So society is for the benefit of the members. So whatever accrues to society accrues to the members, but it flows to the society. So I'm saying, and again, maybe what you're saying is also possibility. And what I'm sort of narrating is what my experience is, that most of the times the transactions are always between society and the developer. So that developer doesn't have to deal
with what you have seen.
Yeah.
You've been practicing for so many years. Yeah. Going with what you have seen as your experience, what does he have to do?
So assuming that there is a transaction happening between society and the developer and not the individual, the money is flowing to the society. In this case, because society is giving away the property and in turn it is getting the property back, which in turn it will allocate to its members in terms of whatever extra carpet area they'll get or whatever. That transaction per se should not give rise to any capital gains tax, because you are getting what you had. Of course, there is some accretion to it, but still you are getting what was your legal right, what you should have got. So that per se does not result into any tax. The rent, I believe what they are getting and any other extra compensation they are getting, probably that will result into taxability, because that is not part of the compensation for surrendering the property and handing over. It is kind of a temporary arrangement.
So you're saying these two are separate things?
Yes.
The rent and the carpet area that he's bought. Correct. Even if he's used the rent to buy the carpet area, they are two separate things.
Yes.
You will have to pay tax for the rent.
On the rent.
However, for the extra carpet area that you're getting, Sanjeev, and this is keeping in mind if you are part of a society and the society is the one transacting with the developer, in that case, you don't need to pay tax on the extra carpet area that you're getting. Moving on, the corpus fund that he will receive, in this case the society will receive from the developer.
Corpus, yeah.
Is there a tax applicable over there?
So assuming that corpus is a contribution that society will receive and it is for the benefit of the members, again that should not, because that will be retained by the society for incurring the cost.
So corpus fund is not taxable.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.